Welcome back. You're watching Big Deal and we are discussing the infrastructure investments. Are they reviving? Are they really coming in? And stressed assets make a bulk of the infrastructure sector currently. So tell us, Suresh, stressed assets, how easy has it been to do deals there? Is that an area of opportunity that you'd look at?
We have looked at quite a few stressed assets as well, but I think the whole clarity of how the banks should be treating them and with the speed at which they should be resolving the issues that are afflicting those sectors, I think has been slower than one would have expected. But being a long-term fund and given that there are opportunities in other areas, we have right now focused on acquiring assets out of the stressed balance sheets rather than acquiring stressed assets themselves.
NPA ordinance has not been, or is it going to be useful?
Look, I
Will
mean,
it solve most of the
it is like saying that, okay, since banks were not taking a call and the decision, you have actually given it to the regulator to really say, okay, I mean, now regulator will force them to take a call. I'm saying, I mean, to my mind, it's at least a way out to make some headway, but not a medium to long term. It is not really a full solution to make the deals happen, because there are still some sectoral challenge and each sector is very different. I mean, let's say if you look at a power, which is a highest stress one, there's some sector issues as well which has to be addressed, not just somebody has to take a call on the what is the write-off which is involved.
Power, thermal power in particular, and Suresh, you have a substantial part of your fund really invested in that. What has been your experience? How bullish or bearish are you in this particular space?
So this sector is more binary, if I may say so. There are two categories of assets, maybe three. There is good assets, which have basically what I call as good is good location, PPAs. A substantial part of their output is tied up in long-term contracts, and coal supply is well taken care of. The second ones are where they have contracts, but there needs to be an infusion of capital for them to either get commissioned or a bit more, spit and polish, and they will be all right. And the third ones are where either on supply side, on coal is not there, or on the output side, power supply agreement is not there, or in some cases the asset itself may be just not completed or not viable. I think there is still a demand for the assets in category 1. More sophisticated investors may also look at category 2, but I think the overall sentiment generally is that people are being very, very cautious. So
when we talk about power, we also talk about renewable space, and we have seen fair bit of action and positivity around that particular space, Manish. Like JERA invested in Renew Power, and there's a fair bit of action there. But then with solar power rates really dropping, the tariff rates really dropping to below 3 rupees per unit, is that really now sending off positive sentiment for the investors to look at that sector anymore?
See, that's a million-dollar question. I don't think, I mean, there's an answer. I mean, whether these tariffs are a game changer or it is a race to death, I really don't know what it means from a stress point of view. I think the only question to the mind is that what is the right returns? Are these tariffs going to have a right returns for the investors, and that will ensure that a further deployment of a capital keeps on coming? I think that's the only sort of a question mark.
Is that question well answered, or are you now in two minds about renewables?
No, I think I don't have further to add to what Manish said. I think capital ultimately finds avenues where it can get adequate returns, and to an extent, we will wait and watch whether the current tariffs that are being bid at would be viable enough for a good long-term investor to make adequate returns out of that. I think can't say whether it is yes, can't say whether it's not. But at this point in time, I think we are cautious, certainly at the current tariff levels.
And what about transmission? That's the brighter spot in the whole power basket?
Yes, transmission is one area which has so far not attracted the interest of investors. And historically, I think the transmission lines have been built at very low IRRs. But as the cost of capital continues to drop in the country, these are actually quite interesting assets because they are long-term assets, right? Very low risks. There are no traffic risks, etc. Normally, counterparties are quite credible, and these are so essential. So we do expect that there is going to be a pool of capital that will come. That this pool of capital may be different than pools of capital that would have come into, let's say, coal-fired power or roads, because the risk patterns are quite different.
Now there's an InvIT also in transmission.
Yes, and we wish them well. I think that'll be a good success if that were to get launched next week, I guess. So,
Suresh, would you invest in InvITs and would you also utilize it as an exit mode in future?
Yes, so there are no restrictions on us as such. We globally, Macquarie has sponsored quite a few similar products, right from emerging markets as well as developed markets. We look at InvITs in India also as an opportunity. And certainly, they are very good exit options for us on the existing portfolio because it's an alternate pool of capital.
So with IRB Infra doing well,
on the transmission, what Suresh said, I think this is one asset class where we are seeing a lot of investors want to invest in. I think the challenge that we see is a ticket size, because there's not much of a, because if a pension fund wants to come in, he wants to have at least a $200 million sort of a deployment, and today you just can't find enough sort of platforms to invest that kind of a capital. I think with a lot of money the government going to spend on the green corridors, because building the renewable sort of a capacity there, if we see more of a PPPs coming in transmission, I do see a lot of investors who are waiting to invest, let's say, on a transmission side of a space going forward.
All right, and one area which is making a lot of news in the infrastructure space, which hasn't really made it to InvIT side, at least as of now, is the tower telecom space. And you've invested there as well. How is that particular space developing, and do you see there is more option for investments for the long run?
Overall, telecom sector is in a bit of interesting phase at this point in time, and to an extent that also affects the telecom tower industry. So there is going to be a phase during which perhaps the tower industry may go through a bit of a rough patch. But the fact is that on the positive side, we are also having a massive amount of data boom coming through. All of us are consuming more data, smartphones are becoming cheaper, penetration levels are still quite modest. So to an extent, all that ultimately is going to need more towers. So in a longer term, if you were to just ignore and persevere through the short term, I think the prospects are quite good.
All right, hold your thoughts, and we'll take a short break on the show, but come back and get the outlook going forward for infrastructure deals and more investments coming in. Stay tuned.